Alrighty. Good evening to you if you're on here watching. This will be recorded and posted, so you'll be able to watch this back. What we're going to do today is we're going to take a look at the Nasdaq futures. We're going to mark out key levels the way that I typically look for them. We're going to start on the higher time frames, and then we're going to work our way down. So for this example, I'm going to be flipping back and forth from TradingView to my TopStep X platform, because I'll have to mark them out on both charts. So I'll primarily work with this one first, and then I'll probably just go in on my own off of camera and mark out these. But so what I'd like to do is start with the monthly. So I got the monthly here. Let's make this full screen. So what I like to do, start with the monthly chart. All my drawing settings go away. All right, so I have to keep it like this. All right, so so let's look at the monthly. So it's the last month of the year. We got December almost done. We have 2 trading days left, and then we enter a new year, new yearly candle, new quarterly candle. Let's look at the quarter for a minute here. So this is what the last 4 or 5 quarters look like. And so let's look at the monthly. So let's start here. So the first thing I like to do is mark out the previous month high. So I have templates for that. So I usually mark it like this: PMH, which is going to signify previous month high. All right, and then I like to mark out the previous month close. So previous, PMC. I usually I have preset colors for these. You can use whatever colors you want. I just like them to be color coded. After I do the high of the previous month and the close of the previous month, I'll go to the previous month open, and we'll do the previous month low. Do I have it here? Nope. So let me make that here. So we're going to put PML, previous month low. I like to change that to a bright red. I'll hit save as, and we'll create a template for that. All right, so that's the first thing I like to do. We want to understand where price is in comparison to its previous month candle. So as of the close on Friday, which was December 27th. December 27th. We closed above the previous month high. Again, we were above it. As you can see, the high of the current month is 22,450. All right, so what I could do as well is I'll just make a quick mess. We'll put it as current, or we'll just put month. We could do CMH, current month high. We'll make it like that. CMH, current month high. Then we can look here. We can mark out current month low. So CML, current month low. Save that as a template. All right, and then since we have the current month open very close to the previous month close, what I'll do is I'll just remove the previous month close and I'll put actually no, we'll keep that as is. All right, so this will give you an awareness when you start dialing into your smaller time frames on where we are in relation to price, right? In relation to the previous month or in relation to the current month. So we set all levels based on November, and then we set some levels based on the high and the low of the current month. All right, so once January comes along, which will be on Wednesday, we can update these levels and update this current candle with this information. All right, after we do the monthly, we'll go into the weekly. All right, so what we'll do is since this week is done, we're going to go in, we're going to mark out this is going to be previous week close. So I set that up as PWC. We're going to do here PWH, previous week high. I'm going to go here and do previous week open, PWO, and then we're going to do previous week low. All right, so now you have your key levels for the current for going into the next week. All right, now you may think this is starting to look a little busy, which it kind of is here on the weekly. So we're gonna go, we can always adjust these levels later, but this is good to understand where you are when you go into the next week. So when the next week comes, are we trading above the previous week close? Or are we trading below the previous week low? Those are all things that can give you clues as to the next into the next targets. After we do the weekly, we'll go into the daily. So we can mark out over here, this is going to be previous day open. It's going to be previous day high, PDH. Then we got, so you see how previous week close is the same as the previous day close, right? What I'll do is I'll leave the previous week close on there because I find that to be a more important level for the next week. So I'll leave that, and then we can mark out here previous day low. All right, and this one you can update every day. So at the end of the trading day, you can update those levels and yeah, make sure you understand where price is. Then I like to go into the 4 hour. All right, so on the 4 hour, you can see where your key levels are, right? So your previous month close is down here. Your current month low is down here. Your previous day low is here. Previous week low is right there. So they're very close to each other. All right, that could be something to keep an eye on. And then you have previous day high, previous day open, previous week high, right? And then you can look all the way up to here for the current month high. All right, so that way you have a structure and you understand where price is trading. And then what I like to do from here is dial into the 4 hour. So one of the things that I've noticed over the last 10 years of watching price action and using some strategies, some ICT concepts, some strategy called the Strat, which you can find on YouTube. But I've noticed that whenever we have candles that we haven't traded back to the opening price, for example, right here, I like to mark that out and what I'll put is 4-hour open. All right, so I'll mark that out as a 4-hour open. So I know that this level is currently untouched. It has not been traded to since it dropped. Okay, now there's another one here, there's another one here, there's another one here. All right, so you can mark those out as you see fit. I usually mark out like the next ones that haven't been touched. So to the left of us, this is the next 4-hour candle that has not been retraded to, and then under here we have another 4-hour open that hasn't been traded to. So I'll mark that out in case we want to get towards the bearish side, right? And then you can mark this one out too, 4-hour open. All right, so again, these levels don't matter when you're looking at the intraday. So although if you look at, let's say you look at a weekly, it's going to look really busy, but once you start dialing into the smaller time frames, it's not going to be in your vision. So only when price starts trading towards those levels will you start to see those levels. So here I'll also mark out 4-hour high. All right, because these could be two targets going into Monday or Tuesday, potentially Monday. But these two levels could be targets. All right, because this would get us back towards previous day open. All right, so let's look at that real quick. Yep, so getting through these levels and trading through would get us back to previous day open. Notice here, this previous day open is untouched. And over here, we have, we're gonna do day open. All right, so I know that since this is marked as white, a white line, I know that this has not been traded to. So that's how I kind of keep it organized in my brain. When it's a white line like that, I know that the level has not been traded to yet. All right, so that's how I like to distinguish those things in my brain. So go back to the 4-hour. All right, the other thing that I'll do often is I'll look for any fair value gaps, which is an ICT concept. So it's an area where the buyers took more control or the sellers took more control, and then there's a separation between the candlestick. For example, here you have you have one candle here, a big 4-hour drop, and the next candle has a high right here. So this space, all this space in between, is a sell side fair value gap. So there are inefficiencies in this price according to ICT, which again, I do use these concepts to have a reference as to what price is actually doing. So what I'll do sometimes, and I'll try not to make the chart get too busy, but I will draw out a box like this, and then I'll notate it, and I'll put like 4-hour fair value gap. If it's a fair value gap that's above us, usually I'll mark it in red. And if it's a fair value gap below where price is, so right here we have a candle high, we have all this price action, and then the next candle low is right here. So this would be another fair value gap that I'll be looking at. So let me just save this real quick. Save this too. Side. All right, let's just mark this out again. 4-hour fair value gap right here. 4-hour fair value gap. Okay, and you're gonna notice. So if we just do a quick look here, according to ICT, he says that when fair value gaps get traded into, and if they're bullish, for example, so if they created the up momentum and price comes back into them and rejects and essentially goes back into the direction that it was going when it created this fair value gap, then it kind of creates a stronger zone, so a more bullish zone. So we did see that here. You have the 4-hour fair value gap. We did come into this on Monday. We slightly broke this low and worked into fair value gap, and then we saw a move up, and then on Friday we saw a move down back towards this fair value gap. It created the low a day right around here at 500, right around 500. Something to note moving forward here is that the 21,500 level has been defended. So if we start to see price break lower than the 500 level, then it could open up the remainder of this fair value gap to the downside, or at the least half of this fair value gap, which is marked out by this white line. If you use TradingView, you can automatically set that. When you draw a rectangle, you can click here and activate the middle line, and that'll take 50% of the range and put it on your screen. All right, so now that we have some of these levels, we got the 4-hour open that's untouched, 4-hour high. We can also mark out this one here. So this is 4-hour open. Okay. Because if we happen to come back down into this level, retest it, and then show a willingness to go higher, then that would give me confidence that we're starting to work through this this 4-hour drop. Okay, so that's another level to watch. You could draw the 4-hour close here if you'd like. I just don't want to put too many things right now on my screen. And then I'll usually go from the 4-hour to the hourly, and I will do the same thing. So I will go in and mark out here that we have a 1-hour open that's untouched, and that lines up with just about the top of the 4-hour fair value gap. And then we'll also mark out, we could leave that one alone here because this one's kind of close to the previous week close. So we'll do this one down here, do 1-hour open. All right, because this open was traded to, saw a bounce at the end of the day. So this is the next one that has not been traded to, and then this one as well. This also lines up with the previous week open. Let me make sure I got that. Yeah, previous week opens right there. So that's the hourly, because we have a big drop on the hour. So that would be the next level I'd be looking at. And then, you know, this low here. But I'll just do 1-hour low here, since that was a pretty big wick. All right, and then I'll go into the 30-minute, and I'll mark out right here. We got a 30-minute open that's untouched, and then you got the hourly, and then you got the 4-hour levels up here. Okay, next one that I would probably mark out would be right here. This will be 30-minute open. So we got the 4-hour open and the 30-minute open very close to each other. All right, this was traded in quite a bit. You can also see here we had a fair value gap from this candle high to this one, and that would have been drawn as green. So you can see, look at that precision there. Top of this candle, bottom of this candle. We broke below here, then it rallied. So the first touch rallied off of this level. Then we ended up dropping down and getting a big move back up towards the highs of the previous 30-minute candle. But look at that precision as far as the fair value gap. Okay, so I'm gonna remove that because that to me has been, it's already used up. So that's you know what I'm gonna do actually? I'm gonna mark this here and I'm gonna change the colors. Do something like this. And I'll put a note here. So I'll just kind of mark a note there that this was a bullish fair value gap. Change the text color here. All right. And then, yep, so we got the 30-minute open there. 4-hour open, 30-minute open, and then we can just dial into the smaller time frames if you like. I find that usually doing the hourly, the 30 and all those are kind of the more key levels. But what we'll do is we'll mark out some of the 5 minutes as well, because those are useful when you're day trading. So we'll put 5-minute open here. And put 5-minute high here as well. Okay. And then we got some more up here. This all kind of coincides with the other levels, but we'll mark this out. All right, so all these white marks have not been traded back to. Once they get traded to, what I'll do is I'll usually remove them from the chart, or if I find that they might be a key level, kind of like this fair value gap, I'll mark them gray so that I know that they've already been traded to. One other small thing to note here is that on the hourly, we came into, check this out for study's sake. On the hourly fair value gap, which is this candle high to this candle low, nothing's traded in this range here on the hourly. Look at the precision of the midway or the halfway point of the hourly fair value gap. The first time we came into it, we bounced right off the midline, so right off of the 50% of this range. So that essentially indicates bullish action. Now there is still a piece of this below here, below that low, that has not been traded to. That is not, this area has not been traded to. So that could be something to keep note of. So I might just leave this zone here. Let's do, just make a note, untouched fair value gap. And that's also right by the previous month high as well. All right, so, and then, you know, let's say you're day trading, you're on the 5-minute chart. All right, none of this down here is going to matter until we start breaking these lows and, you know, breaking this upside structure that we have going on here. So that's how I like to mark out my charts. So I understand what levels have not been traded to yet. Where are the key levels of the higher time frames, and then manage positions accordingly. Right, manage your targets accordingly. So that's what I like to do. So let's save this. Let's apply. So when you, again, so now that we're all done, when you look at this on the daily, it looks insane. Look at all these levels, right? When you look at it on the weekly, look at all these levels. It's wild. But this is what you need to do, in my opinion, for your day trading, because you want to know where these levels are in relation to where you are on the smaller time frames. So for example, now if I cycle into the hourly, I know that in between, let's just open this up. So if I cycle into the hourly chart, right, I know that in between this 1 hour or this 4 hour fair value gap, for example, I have 5-minute opens that are untouched, 5-minute high, 30-minute open. So these would be levels that I'd look for us to come into to test, and then either show a bit of weakness or consolidation and potentially work back higher up to its next untouched targets. Let's take this off. And then I like to look, at a glance at the 1 hour, the 2 hour, the 3 hour, and the 4 hour. So I'll cycle through these charts throughout the day, and I'll usually like line them up in a similar fashion, so I have a good perspective on what, where we are as far as the range. So I usually like do stuff like that and move them around. So I'll save that, and then the last one would be, let me open up one more chart here. And then the last setup of charts would be smaller time frames, so like a 1 minute. Okay, so I'll expand that and get close. Right, I'll get close to the current price. Here on the 5 minute, I'll do the same thing. All right, I'll get real up close with price so I can see what it's doing. And then let's say I'll put like a 15-minute on here. I think usually I'll have like four charts up. So we got the 1, the 5, the 15, and then I'll usually cycle. I usually cycle this last one from like a 30-minute to an hourly chart. So I'll kind of go back and forth, and then sometimes I'll throw on a 4 hour or additional perspective on what we're doing. So that's pretty much how I set these up. And then, you got to follow price action when you're day trading, see what kind of trends are building, understand momentum of price, if it's targeting a specific level. This is all stuff that will help will help you keep yourself on the right side of the trend and have actual tangible targets. So the last thing I'll talk about here is, if I'm targeting let's say I'm on the 5-minute chart here. All right, say I'm on the 5-minute, and I'm targeting this 5-minute candle open that has not been traded to yet. What I'll do is I'll set my order slightly below the actual target. All right, so I don't always put my targets directly there. Sometimes I'll put them a few points below, just in case sometimes price gets really close and reverses on you. So the key is to get the majority of a move and not not try to get the full top to bottom of a range in price action, because it could be very difficult to try and do that. So you want to get the biggest slice of pie when you're trading. And then just at a quick glance, I mean, you have a fair value gap on the 5-minute in between here. You have a bull flag structure as well, which might lead into these targets here. Excuse me. But we did come back into this price action into the end of the day. So the first time it got up there, it failed right here, got a pullback, and now it looks like we want to potentially clear this zone here and potentially have this bull flag and attack these levels above here. These would be my first targets going higher if we decide to do that. So that's, you know, about 50 points up, 50 to 70 points up from where price closed on Friday. So that's it, really. That's what I wanted to go through, was marking out your charts on key levels, starting at the monthly, then going into the weekly, the daily, 4 hour, and 1 hour, and then kind of going into the 30, the 15, the 5, and getting very familiar with where price has not traded to yet, because we like to come back and revisit those levels. Eventually we typically come back to those levels. So that's it for today. Hopefully this was informative for you. I appreciate you hopping on. If you're watching this now or later, please just give this a like, and if you're not subscribed, please feel free to subscribe. I do go live during the trading day, typically around 9:30 a.m. If we have news events at 8:30, maybe I'll go live before that, so maybe like 8:20 going into a news event. Sometimes I'll trade them, sometimes I won't. Just depends on what the price structure is looking like and all that stuff. So typically though, I'll be on for market open New York session at around 9:30 a.m. So thanks again for hopping on. If you're watching this later, hope you got some value from this. All right, thanks. See ya.